All right, so you know how it is, you're thinking about retirement and you want your money to grow, but you also don't want to lose what you've already saved, right? It's this balance of risk and security.
Absolutely.
So today we're going to look closely at a specific financial product designed to tackle that very challenge. It's called the Protective Asset Builder 2, Fixed Indexed Annuity, and the info we're using comes straight from Diversified Insurance Brokers.
Okay, sounds good.
So this deep dive, let's really try to get at what are the key features of this annuity, how does it actually work, and is it something that could potentially be a good fit, for someone's retirement plan?
Yeah, I think that's a really smart approach because, there are a lot of different options out there for retirement planning, and it can be really overwhelming to try to figure out what's right for you. So let's break this down.
Exactly. And I think what's interesting about this particular annuity is that it tries to offer this kind of like middle ground, right? Like you can potentially see your money grow, but it's also protected from those like scary market drops.
Yeah, that's the core idea here. You're not directly investing in the stock market with this, so you don't have that same level of risk, but you are linking the potential growth of your annuity to the performance of certain market indexes. So if those indexes do well, you have the opportunity to benefit from that growth.
Okay, so it's linked to indexes. You use that phrase a couple times, but can you actually explain a little more about what that means?
Yeah.
And also, what are the specific indexes that are available with this annuity?
Sure. So basically, it means that the growth of your money within the annuity isn't directly tied to buying specific stocks, but rather it's based on the performance of these broader market indexes. And the Protective Asset Builder 2 gives you a few different options for which index to link to. So you have the S&P 500, which a lot of people are familiar with.
It's like a benchmark for the U.S. stock market, right?
Exactly. It tracks a broad range of companies across different sectors. Then there's also the JP Morgan Mojave Index and the Citi Flexible Allocation 6 Excess Return Index. Those are a little more specialized.
Okay, and so even though these are all indexes, they're not all created equal, right?
Right. Each index comes with its own set of rules for how the potential gains are calculated. Those are things like participation rates, caps, and trigger rates, and these things can vary a lot depending on the index and even the specific annuity contract.
Okay, can you kind of break those down a little bit? Like, what does it mean for me, the investor, if, let's say, one index has a higher participation rate than another one?
Sure. So let's say, for example, the S&P 500 goes up by 10% in a given year. If your annuity has a 100% participation rate in that index, you'd get the full 10% growth. But if it has a 50% participation rate, you'd only get 5%, you see.
Okay, I see. That makes sense.
And then caps, they basically put a limit on how much your annuity can grow in a given period, even if the index performs really well. And trigger rates determine whether you get any growth at all based on whether the index hits a certain threshold. So yeah, there's definitely some nuance to it. But the good news is that with this annuity, you have some flexibility to choose an index and a strategy that aligns with your risk tolerance and your outlook on the market.
Gotcha. And so if someone's like, you know what, I don't want to mess with any of that, I just want something stable, is there an option for that too?
There is. They also offer a fixed interest option where you basically earn a guaranteed rate of return. It's not tied to any indexes. It's just like a traditional fixed annuity.
All right, so we've talked about growth, but what about accessing your money? Like, what if you need to withdraw some funds before retirement?
Well, good news there. With this annuity, you can withdraw up to 10% of your accumulated value each year after the first year without any penalty.
Okay, so 10% per year, penalty-free. That's nice.
Yeah. And on top of that, they also waive the typical withdrawal charges if you have certain qualifying events happen, like if you need to go into a nursing home long term, or if you're diagnosed with a terminal illness, or even if you experience unemployment. So it does give you some flexibility in case of emergency.
Yeah, that's good to know. So, okay, 10% per year, penalty-free. But what if you need to take out more than that for whatever reason? What happens then?
Well, if you withdraw more than that 10% in a given year, you might have to pay what's called a surrender charge. These usually decrease over time, like they might start out higher in the earlier years of your contract and then gradually go down until they eventually disappear altogether. And on top of that, there might also be something called a market value adjustment, or MVA, which is basically an adjustment to your withdrawal amount based on the current interest rates at the time.
Okay, so it's not a free-for-all.
Right. Exactly. There are some rules in place to encourage you to keep your money in the annuity for the long term, but there are also provisions for accessing your funds if you really need to.
Yeah, makes sense. All right, so let's talk about the big picture here. Retirement. How does this annuity actually turn into a retirement income stream?
That's where the annuitization feature comes in. And with this annuity, you have a few different options for how you can structure that income stream. So one option is to annuitize for a lifetime income. That means you'll receive guaranteed payments for as long as you live, no matter how long that is.
That's peace of mind right there.
Absolutely. And then another option is to annuitize for a specific period of time, like maybe 10 years or 20 years. And that can be a good choice if you want to supplement your income for a specific period of time, or maybe you have other sources of retirement income that will kick in later on.
Yeah, like maybe you have a pension that starts later or something.
Yeah, exactly. And then there are also options that include a death benefit component, like a lifetime income with a cash refund or a lifetime income with an installment refund. These basically guarantee that your beneficiaries will receive a certain amount of money, either as a lump sum or as continued payments even after you pass away. So it kind of gives you that extra layer of protection for your loved ones.
I like that. So, okay, you've been paying into this annuity for a while. You reach the end of the initial contract period.
Yeah.
Maybe the surrender charges have all expired. What happens then?
At that point, you typically have a few choices. You could choose to renew your contract for another term, and they might offer you new interest crediting rates for that new term, or you could decide to withdraw all of your money without any surrender charges. Or you could go ahead and annuitize and start receiving those regular income payments. And of course, if you don't make an active choice, the contract might just automatically renew under the existing terms. So it's important to be aware of that and make a conscious decision when the time comes.
Right. Okay. So we've covered the growth aspect, the withdrawals, the retirement income stream. What about protecting your family? Like what happens if you pass away before you start taking retirement income?
Well, the annuity includes a death benefit, which means that your beneficiaries would receive a payout. And this payout is usually the greater of either the full contract value or a minimum guaranteed amount. And the good news is that there are typically no surrender charges applied to the death benefit. And if your spouse is the beneficiary, they often have the option to continue the annuity contract themselves instead of taking a lump sum payout, so they can continue to benefit from those features and that protection.
Yeah, that's really important, especially for couples who are planning their retirement together. Okay, so last but not least, who is actually the company behind this annuity?
And this particular annuity, the Protective Asset Builder 2 is offered by Protective Life Insurance Company. They've been around for over 100 years and have a pretty solid reputation for financial strength and stability, which is obviously a really important factor when you're considering a long-term financial product like this. You want to make sure the company is going to be around to fulfill its obligations.
Right, exactly. Okay, so we've covered a lot of ground here today. Let's just kind of bring it back to the listener for a minute. What would you say are the key takeaways here?
Sure. So I think if we connect this back to what we talked about at the beginning, this annuity, the Protective Asset Builder 2, is trying to offer a balance between growth potential and downside protection. It gives you the opportunity to participate in some of the market's upside, but without the risk of losing your principal if the market goes down. And it also provides you with some flexibility in terms of accessing your money before retirement and a variety of options for creating a stream of income once you do retire. So yeah, I think it's a pretty compelling product for people who are looking for that kind of balance.
Absolutely. We've done a deep dive today into the Protective Asset Builder 2, fixed indexed annuity, using all the info from Diversified Insurance Brokers. We've talked about how it works, the different ways to potentially grow your money, the liquidity options, the retirement income choices, and the company behind it all.
And I think the big question for the listener now is to really think about how these specific features, the potential for market-linked growth with that downside protection, the different crediting strategies, the options for accessing your money, the income choices, how do all of these things align with your personal goals for retirement? Is this something that could potentially be a valuable tool for you as you plan for your long-term financial security?
Food for thought, everyone. Thanks for joining us on this deep dive.
Yeah, thanks for having me.